Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, April the 22nd, the year 2019. Let's talk trading. Weekly opening gap. Yesterday was Easter. I didn't get to do a video. Um, Market didn't really move that much, so I just waited till Monday. And we're going to talk about another one of the methods, horizontal line methods. Holo for highest open, lowest open. But first, let's start this week off right and focus on our money and risk management. So it's going to keep you in the game. And as you can see here, all but one gap is filled. And we can see, looking here at the weekly chart, the euro yen started out in the lower wick zone, has exited the lower wick zone, and looks like it's trying to hit that midpoint. We've talked about that before. And on a daily, you can see here, range is only 30, only one pair, 100 or better, which is the new beast, the pound, New Zealand. And you can also see here how the euro yen on the daily entered the upper wick zone of the previous daily candle, busted right through, and now is about 14 pips above that high. Okay, holo zone. What is a holo? Well, I was just looking at the chart and I noticed something. If you can remember about the turn trade, the start of every quote unquote trend or reversal, it's always going to be a bear candle followed by a bull candle for an up, or a bull candle followed by a bear candle for going down. And so you can see here, just looking at this M15 chart, we had that turn trade here. But notice, we also had the lowest open here. I mean, it's one of those things, when you look at it and somebody points it out to you, it makes sense. But you can be staring at this for a long time and never actually see it. So once again, lowest open. Now in this case, the euro yen put in a lowest open and has not returned. And right now you can see it put in a highest open. And this is the H1 open, even though right now we're looking at the 15-minute time frame. But if we switch over to 1 hour, you can see it right here. Put in that lowest open and moved up. Now, this was the daily open. So at the time, this was the lowest open. And price went up, came back down, put in a new lower open, and then returned. And so if you can see that, you see how we had a lowest open, price returned and moved. So what we're trying to do is sometime during the day, price is going to make a lowest open and it's going to make a highest open. And what we want to do is see if we can make money playing the reversal, trading off of that reversal. And in case you're wondering, this is a 2016 Holo Zone indicator that puts all the information out there. We can talk about that indicator later this week. Now I just want you to get the concept down. Okay, that's just a tick chart showing the current movement. And here, just once again, daily range is only 30. And you can see prices entering the ATR zone, which doesn't really have anything to do with the Holo zone. But I just want to make you aware of where price is right now, because price has a tendency to reverse out of the ATR zones also. And for those of you wondering, it's the ATR lines indicator right here. That's not a donational. Now, on the dashboard, we have the Holo input. It's telling me right now that we've got the highest open in progress, and price is 7 pips above it. Okay, we've got about 19 more minutes left in this 1 hour bar. So right here is the highest open. Now over here, this is the since highest open, or since the high low. And so you can see here, H1 0 bar. So the current bar put in a daily high. See, there's the daily high. H1 bar, this has put in the current daily high, and the H1 bar put in the low 18 bars ago. Now, one of the things about it is the ones where it's putting in the high, that's a get ready and get set indication, meaning these pairs are pairs that you want to look at the trade the next hour. So you let this bar close, because the next bar could put in, if it closes above this line, then the next bar is going to be the new highest open. But you can see here in yellow, H1, meaning the previous bar put in the highest open, and you can see here it failed to make a new high, and it came straight back down. And that's what we want to look for. So you find an H1 bar making a highest open, let that close, and then on the next hour, you can then see if you can take that trade. Now, you can do H30, M30 highest opens, M15 highest opens, because each one of those will be a little bit higher than the H1 usually. They could be the same or higher. You can even do M1. So M1 highest open is probably somewhere up there, and then you could see how price would fall back down through it. But my personal preference is I look at the H1 highest open. It just seems to be a profitable trade for me. But each trader has to find what nuances works best for them. So I know some people like to use M15 as a. Now on the trigger side of things, some people like to even look at M5. Okay, and so what they want to do is they want to see a reversal bar. So you can see here prices in the highest open range. They want to see a bear bar come back. They want to see this bear bar close or possibly come through this area. See, you do not want to enter now, because see, if you had entered here, you see you would have gotten burned. So that's why it's important to let this H1 bar close, so you can pick up the new highest open. And usually, once again, you want to see a reversal, or in this case, a bear candle open above the highest open, and then come back down and take that trade. Okay. So over here, we've got a few more indicators to show. We've got a couple of multimeters. So you can see here, we've got a highest open in H1, highest open in H4. Actually, I think this is showing that price, is above the highest open on these lower time frames. That's on the Holo there. And we've got, this is showing how many pips above or below the highest open and the lowest open. If it was below, it'd be red. Also, I have a training wheels indicator for Holo. I have it turned off. I'll turn it on, and it will give you a warning here. Okay, you got a breakout. In other words, this broke above this D1. You want to be careful because price can run if it breaks out at a high or if it breaks out at a low. Price can run. So when you do reversals, you have to be really careful. But being careful just means you've got your stop loss in place. So if it goes against you, you'll get stopped out. Now you can see here, high a day, low a day. You can see we put in a high for H4, for H1, M30. Put the high of the day in on the current bar. And so you can see here back to this trade right there. You can see price move down a little bit lower. And so once again, last H here for the highest open was the last bar. That's what we're looking at. That's what we would trade this bar. Now, next candidates for highest open trade are here. Now, lowest open candidates are right here. You can see dollar Canadian has put in the lowest open. In fact, let's just switch over to dollar Canadian on all the charts so we can see that. Okay, broke through there. Right here, you can see and put in a new low right there. You can see it's telling you had a breakout at a low, and right here this is the trigger to go. So you're already in a lowest open situation, and as you can see here in our Randy real-time trade, price is reversing. And just to go through the other chart, you see it approached that ATR zone. Once again, lowest open trade. Here we go. Now, question is, do you want to trade? Here was the lowest open right here on this candle. Do you want to trade against the H1 candle color? Sometimes you might want to take that trade, sometimes you might not. Rule of thumb, if you're just starting out, just let this bar close. Chances are next bar might come down, test the lowest open, and then shoot back up. Or it could come back down and make a new low, and you would get stopped out. So rather than take that chance, just be smart and wait. And let's see, we got the pound dollar. See, on this case, see it put in a lowest open, made a new low. Lowest open, made a new low, but it reversed and came back. And we can probably see that best. Okay, we're going to have to switch here. Pound dollar switches all our charts. So right here was a perfect example. Came down, shot right back up. So you see here, you even got another chance. It dipped back in, came back out. Sometimes these dip trades, even though you're going against the lower time frame candle color, so long as your current, the H1 candle color, is the right color. As you can see here, you can do that. It dipped in and came back out. So that would have been a really nice trade. So, fellow traders, that's like an overview of the Holo or highest open, lowest open trade. We'll be going through it this week. If you have questions, feel free to ask. And in the meantime, just remember, it's not what you trade, it's how you trade it. So let's go out there and drain the banks.